These charts are amazing, aren't they? We see our weekly vertical crossover working on gold. We see our 4-hour jumping in point working on the S&P 500 and working on the NASDAQ 100. Those trades are looking quite nice. And of course, that's what we are all about here at chartingwealth.com. We want you to train with us, learn how to read these charts. We want you to create your own printing press, a virtual one first, till you learn how to do this, combine all the knowledge you have, and then you can do whatever you want with your own money. We're not a stock calling service. We're an education firm. Thank you for all the great things that we hear from you. We see what you post at our YouTube channel. We get your emails. We appreciate all the kind remarks, and we thank you for making us, gosh, in the top 3, 4 in the world when it comes to stock charting, stock market, stock trading. Thank you so much for doing that for us on iTunes. And again, we just appreciate you being with us. If you're not a subscriber to chartingwealth.com, then you need to become one. We have a great training video that we're sharing with our subscribers. That is for free. Just go to chartingwealth.com, put in your name, email address. We never spam those lists. You can ask anybody. You can read all the postings. We never do that. We will share with you our daily market reviews, our weekly market review, which is what we're presenting to you right now as we jump into things, and you'll get our special training on the coming market crash and how not only to survive, but to thrive. That is what we teach here. Let's jump into these charts. We see the S&P 500 up 0.48% for just the day. We have a nice big green up candle, the biggest we've seen in many weeks. Derivative oscillators flat, price percent oscillators heading up on that weekly chart. We go from the weekly to the 2-day, and of course we see the 2-day crossed over going up back on Wednesday the 3rd, and this latest 2-day candle ending Friday the 5th is another green up candle. Higher closing, riding right up quite nicely that trend line. Derivative oscillator heading up, price percent oscillator pulling away from the red signal line. We go to the 4-hour chart, and of course that 4-hour chart is continuing to move up. Things are looking quite nice as we see things just continue to move up, up, and up. Now, of course, we are waiting on our traditional trade for that 4-hour chart to give us a pullback for an appropriate jumping in point on the 4-hour chart. Of course, that weekly vertical crossover still in effect, going back all the way to when? That weekly vertical crossover occurred all the way back on Friday, the 25th of January. And again, we go back and take a look at our weekly chart, and we can, of course, see that in effect. And hasn't it been beautiful? You look at the weekly vertical crossovers, and you can see how accurate they are going back months and months in time. Occasionally, you'll find an anomaly where they don't work, but time and time again, they work over and over and over and over and over. It's just beautiful. So that's what we're all about here. Primarily, our best way to look at trades is with weekly vertical crossovers and jumping in points, or later in the moves, when the 2-hour chart crosses back over after it's moved in the opposite direction of the weekly chart. It crosses back over, then you have a pullback on the 4-hour and a jumping in point. So things are beautiful as things continue to move up, up, and up. How long will the stock market go up? Until it doesn't. And when it doesn't, we'll see it, we'll be ready for it, and we will move with it in that direction. Now, let's talk about what's going on the Qs. Qs closed higher. Now, again, little bit, let's go to the weekly first. Closed higher, as did the 2-day. There's a little bit of a warning there on the 2-day I'm going to show you in just a minute. But after a week where there was some weakness in the prior week, of course, this last week, nice strong up movement on the NASDAQ 100. Derivative oscillator gaining upward momentum. Price percent oscillator heading up. We go to the 2-day chart. That's where I wanted to show you. You see that there is a wick that is much higher, well, that is higher the prior 2-day candle than this latest one. We'll see that played out a little bit in the 4-hour chart. The nice thing is derivative oscillators gaining upward momentum, and most importantly, price percent oscillators still heading up, price movements well above the 2-day and the weekly trend lines. We go to the 4-hour chart, and we can see that sideways slide from where things on the Qs topped out on Wednesday morning, the 3rd of April, and then sliding sideways up in the morning on Friday and a little bit more in the afternoon, up 0.52%. But again, a bit of a sideways slide underway. We want to see things move higher than the wick on the prior candle back all the way on Wednesday morning. That's the reason the derivative oscillator is losing momentum, and that price percent oscillator is not heading up strongly. Still a ways away from the red signal line, but that can change quite easily. So again, we did have, of course, back on Monday, the 1st of April, April Fool's Day, we had that crossover jumping in point in the afternoon. Price movements considerably higher than that candle. So, again, things are still decent, but we want to pay close attention to that 2-day chart and some weakening that we see there, particularly in our Heikin-Ashi candlesticks and that sideways slide on the 4-hour. Remember, the weekly chart still strong, makes us feel good about this trade continuing, but as the week starts off, pay close attention to that. Okay, back to the weekly. We leave stocks and we go into bonds. Bonds up for the day 0.13%. Finishing the week with a red spinning top means indecision tending down. Price percent oscillator flat after 2 prior weeks of decent run-up. Derivative oscillator still oscillating upward, but again, bit of a pullback in bonds after that rise. We go to the 2-day chart, and of course we have the 2-day, again, really, it is moving down, but it's tending to move sideways. We didn't have price hit below the lower wick on the 2-day candle ending, representing both Tuesday and Wednesday, the 2nd and the 3rd of April. So this latest Thursday and Friday is about the same area. Derivative oscillators continuing to lose momentum. Price percent oscillator heading down, but hasn't crossed over going down. So still in a confirmed up move there. We look at the 4-hour chart, and what are we waiting to see happen here on bonds? Well, we're ready. We're in a pullback scenario. So if before the 2-day chart crosses over going down, we see up movement here on the 4-hour chart and a crossover going up, we're poised for an up move in bonds. So watch and see how things go at the beginning of the week. If you see considerable weakness in the stock market, then of course you can expect bonds to probably move in the opposite direction. Typically they're inversely correlated. Why? Because when the stock market's not doing well, people tend to put their money into the bond market, and the opposite is true. So if we see stocks weakening over the course of the next week, keep your eye on the prize. You might have a jumping in point on 20-year bonds to do a practice trade. Okay, let's leave bonds and go to gold. Gold down for the day. And remember, we had that weekly vertical crossover at the end of the prior week, the 29th of March. And of course, this week is what we expected, a down week, a red down candle. Now, we would like to see gold moving further below where it already bottomed out back there on the week ending the 8th of March. And we'll talk about that a little more because we've got something for you to see as we get into that 2-day chart. Derivative oscillator gaining downward momentum, price percent oscillator pulling away from the red signal line, which is what we like to see. And of course, here we are on the 2-day chart. I want you to pay close attention. We've been talking about the moving average, 200-period moving average line, where we've seen gold bounce off starting back on the 23rd of January. Gold bounced off that, moved up, then moved down and bounced off the, I guess that's sort of a purplish chartreuse maybe color line that represents the 200-period moving average line, and we're back to it again. Are we going to cross below it? That's the real question. Somewhere around the 121 mark, will gold move below that? If gold does, then we can expect to continue trundling down if this doesn't, the 200 period moving average line doesn't present a floor, that is resistance. If it bounces off that again, then we've just not gotten enough energy for gold to continue its down move. So we'll watch derivative oscillators gaining downward momentum on that 2-day chart. Price percent oscillator is heading down. It is a red candle. Price movement is below, of course, that 2-day trend line. And we go from the 2-day to the 4-hour. And this is where, again, we see that bottom. We saw a bit of an up move in the afternoon. Now, again, these are Heikin-Ashi candlesticks. Yes, gold was down for the day, 0.11%. Heikin-Ashi candlesticks show us average pace, and the average pace is trying to bounce off that 200 period moving average line and move up. So again, that's not what we want to see, but that's what it's trying to do. So just keep your eye on things. Crossed over at the end of the day going up. So if you're in that down play on gold and you're shorting gold at this time, then of course I want you to be careful and watch and learn about how resistance areas, particularly on that 2-day chart on the 200 period moving average line, pay close attention to how strong that can be. You will find that moving averages many times, one reason we track the 50 and the 200 is they can help us find resistance or support levels. So we'll continue to keep our eye on things and pay attention to that. Now, if you don't have a copy of our book, we want you to have one. How do you get one? We're in our 8th printing. Follow the link in the show notes that you can find at our YouTube channel. Please subscribe there. And of course, if you want to get all the goodies, subscribe at chartingwealth.com to our daily review and also our weekly review and forecast, what we call our comprehensive review. Once you subscribe at the channel, chartingwealth.com, you'll get all sorts of good stuff. You'll get links, of course, every day to our weekly market worksheets, daily market worksheets, trade worksheet, all the special trainings we put out. We have a special one for you, as I said at the beginning of the program. That is on the coming market crash. Are you ready? Do you know what to do? We're sharing that with our subscribers at the website. And also, you can buy our book. You will see the link in the show notes there. You can also become a Patreon supporter. We have all sorts of special things for our Patreon members. At any level, you get our short chart training. You get our Bitcoin training and our Bitcoin chart. You get our quarterly chart training. And, of course, at all levels, you get to join our monthly question and answer session, as well as us reviewing for you the stocks and ETFs you're interested in. We take a smattering of those we're asked to look at, and we review those for our Patreon friends. So if you're interested, check that out. You can find a link in the show notes to our Patreon page. Folks, that's where we are as we end the week. Hope you have a fabulous weekend. Get loaded up, ready, primed for the coming week. If you really want to supercharge your training, fill out that weekly market worksheet after you've listened or as you're listening to the show. Get your trade worksheet ready in case you jump into a trade over the course of the next week. Again, those PDFs are for free in the show notes. And listen to a training or two over the weekend. Look under the training portion at our website, chartingwealth.com, and listen to a couple of them. Get yourself a notebook. Take some notes. Again, 10 minutes a day is all we ask. 10 minutes a day for greatness. 10 minutes a day for early retirement choice. 10 minutes a day for creating your own money printing press. And we do it here for you every day for free. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.